Yes, hello. So we are back again for another lesson 2, which is about order blocks. So order blocks are mostly originating from the inner circle trader method, which is what we call ICT trading strategy. And order blocks are what exactly? How exactly are order blocks, and how can we actually trade order blocks? So the very important thing to understand is that we take our entries in where we actually see order blocks. Okay, so order blocks are areas where we are going to take our entries. Okay, so let me explain to you about what exactly is an order block. Okay, so an order block is a visible spot on the chart where we see large orders being placed on the market, and we will notice large orders being placed in the market, followed by a quick move from that region, leaving behind imbalances, and structures will be broken. Okay, so I know this explanation is a little bit confusing, so let me start from a little bit and explain what exactly are we explaining here. So we are trading smart money concept, and what exactly is the smart money? Okay, concept is understood. Okay, so what is smart money? We are trading smart money concepts, so we understand the word concepts. Okay, but what exactly is smart money? So smart money, these are large banks, big institutions. These are like the drivers of the market. Okay, those people with large capital in the market, which are capable of moving the market either to the upside or to the downside. Okay, so we are just traders who are having a small capital which does not affect any movement in the market. So what we are doing is this: those big institutions, which are what we call smart money, those big institutions or big banks or big those companies with large capital, those are the ones which are capable of controlling the market. Okay, so why? Because they have large capital. Because once they press their capital, they are inside that. Inside there, when they place their capital in the market, they drive the market. For example, if they decide to buy in the market, you will see a large or a big impulsive move to the upside. Okay, where you look at the chart, you see like the market is moving to the upside with a very strong momentum, with a very big speed. Okay, very large candles. Okay, but if they decide to sell in the market, you will see the market moving to the downside, which is an uptrend. Okay, so what we do, we trade in their direction, we follow their footprints, we follow their directions. Okay, and how do we actually follow their direction? We follow their directions by identifying areas where they are actually going to take their entries. Okay, that is what we say we trade the smart money concept. We trade in the direction of the big banks, we trade like banks. Okay, so if you want to understand where to take your trade, you have to understand those big banks, big institutions' ways of trading. Okay, and their ways of trading are actually where we actually expect, like they are taking their trades in areas where we call order blocks. And that's why I'm saying order blocks is a visible spot on the chart where large orders is being priced on the market. So what do we actually say large orders is being priced in the market? We say large orders is being placed in the market because we actually see a very strong movement either to the upside or to the downside at a certain point. Okay, so an order block is that candle, is that area, a visible spot on the chart where you are actually going to expect to see a very strong movement, a very big movement to the upside or to the downside. Okay, you understand that? So you will see a very strong movement. You see a quick move from that area. You see a very quick move from that area. That area is what we call an order block. So I will show you what an order block is. Okay, the first thing to understand is what an order block is. So, and that movement will be a very strong movement, a very quick move, which will leave behind some imbalances, and also structures will be broken. Okay, you will see breaks of structures. Okay, so the candle before that impulsive move. Okay, so if you see a very strong impulsive move, like you see an impulsive move like this. Okay, so the candle before this impulsive move, okay, if we see like we had maybe a candle here before this impulsive move, is what we call an order block. Okay, so that is actually how simple we can actually try to explain an order block. So, and I will show you exactly, I'll continue explaining to you about order blocks. So we have two types of order blocks. Okay, but in a simple way we can explain order blocks as what we call a last opposite candle before a certain movement. Okay, for example, if we see a very quick move to the upside in an uptrend, so we look at the if we are moving to the upside, we have bullish candles. Okay, if we're moving to the upside, so you have to look at the last bearish candle before those big bullish candles were formed. Okay, so that last bearish candle is going to be our order block. So if we are actually moving to the upside, if we are creating a series of higher highs and higher lows like this in an uptrend, okay, we have to identify before this impulsive move which block structure. You see this impulsive move here, okay, which block structure. Okay, before that impulsive move, that is, we are going to look at the last opposite candle there. Okay, so example, maybe we are moving like this to the upside. Okay, so what we are going to do here, we are going to look at this impulsive move. Okay, we see this strong movement which are block structure. Okay, here we actually see both break of structure. Okay, so here we look at this impulsive move which block structure. Okay, this movement of this strong bullish movement which block structure. We are going to look at the last bearish candle before this bullish movement that block structure started. Okay, so that last opposite candle, that last bearish candle is going to be our order block. Okay, you understand that? So okay, so like here you can actually see here, this is how we can actually say we have two types of order blocks. We have a bullish order block and we have a bearish order block. So a bullish order block, when we talk about a bullish order block, is the last bearish candle before the impulsive move, and that candle will normally consist of most of the body with a very minimal wicks. Okay, and this is what we call our bullish order block. To mark our order block, we draw the zone from the top of the candle to the bottom, but sometimes you may also include the wicks. So you can actually see this one here, this red candle here. This is the last bearish candle before this very strong movement to the upside, very strong bullish movement to the upside. Okay, so this last bearish candle is going to be our bullish order block. Okay, and we are going to wait for the market to come back to that zone, to come back to this area. Okay, to come back to this order block, as we can see in the lines here, in these white lines here. We are waiting for market to come back here, and then we can continue doing what? Can continue buying. Okay, you understand that? So after that, we have what we call bearish order block. Okay, so a bearish order block is when we look at the bearish order block, is like this. You see a bearish order block is a bullish candle, is the last bullish candle, is the opposite of a bullish order block. So a bearish order block is the last bullish candle. Okay, you understand my words? It's the last bullish candle before the impulsive move. That candle will normally consist of the body with the minimum wicks. Okay, and it is the same as how I explained about the bullish candle. So this is what we call a bearish order block. And in order for us to mark our bearish order block, we are going to draw from the top of the candle to the bottom, and you may also include the wicks. Okay, so you can actually see from here, from our chart here, how we can actually identify a bearish order block. Okay, so a bearish order block is like this one, that gray candle, the last gray candle before this movement of this impulsive movement, where we see a lot of red candles here. So these red candles are bearish candles, and these gray candles are bullish candles. Okay, so the last bullish candle before a very strong movement to the downside is what we call our bullish our bearish order block. Okay, our bearish order block. Okay, so we are going to wait for a retracement like what we see, for the market to come back here, and we are going to sell. Okay, you can actually see here we are going to take our entry at that point, and our stop loss is going to be somewhere there. Okay, so it is simple like that. Okay, so we come to what we call a bullish order block. Okay, from this structure here you can see, we can clearly see, as I said, the bullish order block is the last bearish candle before an impulsive move which breaks structure and leave imbalances. Okay, so this last red candle here, this is our what? This is our bullish order block. You understand? The red candle there, the last red candle there, that's our bullish order block, the last bearish candle before an impulsive move to the upside which breaks structure. Okay, you understand? So that's how we can simply understand the bullish order block. Okay, so in the next video I'm going to explain to you about imbalances or market inefficiency. All these are very important in our trading so that we may actually create a very strong strategy. Okay, so I'm going to explain about market inefficiency or what we call imbalance in the next video.